Hi Trader, Tina here once again from ShortMeTina.com with my daily recap. Happy Monday. I hope you're having an enjoyable Monday. Please excuse the audio. I'm on the road again, so I'm not near my typical recording software. So again, please cut me some slack in terms of audio quality. But like I indicate, I will do a video every single day when the market is open. All right, so let's start off really quickly with the SPY, the S&P 500. Right now, what you're looking at is a daily chart dating back to around 2017. So we're up about 1% on the day on news that China or some Chinese official contacted President Trump over the weekend and trading talks seem favorable or has resumed. And so if you go back to the video that I did on Friday or any of the videos I've done within the past 2 or 3 weeks, I said try to focus not so much on sort of the or don't trade based on what the president tweets day to day or week over week, because if you do that, for me it's a very exhaustive process. What I've been doing is I've been focusing on price points and technical levels. So now if you look here, I've identified a range more or less where the market, or the SPY in particular, has been trading since we had this pullback after rate cuts, right? And so that range is 281.72 to 294.15. So essentially I'm saying wake me up when the market breaches one of those levels. So if we fall below 281.72, and I thought that might have been a possibility today considering the sell-off that we experienced on Friday. In fact, the markets went as low as, let's see, where did we go? We went as low as around 290.40. No, that doesn't sound right. Is that correct? No, exactly. So we went as low as a 283.47 on Friday, essentially getting close to the lower end of that range. And so considering we closed relatively close to that low on Friday, I thought we were going to open up a bit lower today. And that's exactly what might have played out, because if you looked at the futures, the Dow was down about, I want to say 300 points, and then it actually did a reverse when the president issued that statement about talks resuming with China. At any rate, I am not paying attention to anything in between, and essentially we've functioned in between since this pullback. I'm just looking at the extreme end. So if we breach that 281 to 280 level, then things get a little bit interesting. And conversely, if we trade above that 294 level, right, things get interesting. Today we closed at 287.97, so we're very much still operating within that range, and because of that, for me, there really isn't much to be done. And I think if you take the market or look at the market from that standpoint, things will be good for you. All right, what else do we have? All right, and then we have the IWM daily chart going back to around 2017, similar to the SPY. We're up on the day about a little over 1%. I see a quote here of around 147.04. So like I indicated on Friday, and feel free to go back and check that video out, I indicated I'm not going to pay attention to sort of like all this stuff that's going on in the middle. I'm just going to focus on the ranges. While I don't have it highlighted here, I'll tell you them right now. So the bottom end of that range, let's call that support, comes in at 144 to 145. We actually hit that level on Friday, and just based on my technical analysis skills, even though I was expecting a quote-unquote pullback heading into today, I said, well, if I was to trade the charts and not necessarily what I think is going to happen, then it would have been wise to go long around 144 to 145, because you will get that bounce, right? So that level, again, the support is around 144 to 145, and I'll explain what the red arrows are in a second. And in the upper end, the blue line, where the black arrows are, that's resistance. Let's call that around 160. So every time you see a red arrow on the support, that's essentially in the past 2 years where we've gotten close to that level or touched that 144 to 145 level and experienced a bounce. So 2 years that it's happened one, more or less, 2, 3, 4, 5, around 6 times, right, give or take. And you can see sometimes I'm actually like clumping the days, because you can see here we actually hit that level about maybe 1, 2, 3, 4 times in a week span, but I'm going to call that as one because they were in close proximity to each other. If you actually calculated specifically and counted them on their own every time the market hit 144 to 145 and bounce, I'm sure you'll get more than 6 times. Equally here, where the black hours are, essentially it's when the market got closer, it hit that resistance level of 160 before pulling back. And you can see that this is a relatively strong channel because, again, we've managed to bounce off a support and sold off resistance several times within a 2-year span. So for me, those are key levels. Anything above, I wake up. Anything below, I wake up. So the president can tweet all he wants. He can talk about tariffs all he wants. I'm going to play the charts. And if I play the charts, I shouldn't get worried until we breach that 144 level to the downside, or I shouldn't get concerned unless we breach that 160 level to the upside. All right, so that's all I'm paying attention to with the IWM. I have not changed my thesis. I've been saying the same thing over and over, and I'll continue to repeat myself because I think it's important, and it will prevent a lot of folks from getting overextended or stretched too thin, or just in general, it's going to just eliminate a whole lot of frustration that I'm seeing now. You're not going to have to deal with, your portfolio being up 10% one day, down 10% the next week. Like, we don't want to do that. Let's just focus in on the things we can control. And for me to do that, I need to pay attention to price points and less on what's circulating within the news. Okay, what else? And let's go over gold. So if you're looking for some sort of hedge to protect yourself during these extreme volatile time in the market, you might want to consider getting into gold, ticker GLD. Right now, what you're looking at is a daily chart dating back to around 2016. Again, you can see that gold clearly broke out back in May of 2019 when it went above or traded above that 130 level. We're running into resistance here of around 142 to 144. If you're looking to get long, I don't think that this is necessarily a bad area, 142 to 144, managing that we can stay above it. But for me, I'm a little bit more cautious. I'd wait for it to actually pull back, perhaps fill one of these gaps before actually taking a position. I am looking to take a position, perhaps on both sides, both long and short in gold. But if your portfolio is long only and you're looking for a hedge, you might want to consider getting into gold, and I'll go over a few others right now. All right, and then we're looking at silver here, ticker SLV. If you don't want to get into gold as a hedge, you can also consider silver, up about 1%. Again, this is just to combat the volatility if you have a long-only portfolio. I'm not in silver as of yet, but it's looking like a decent trade is setting up, right? So we're sitting here at 1652, up about 1% on the day. I probably wouldn't get around here. I'd probably wait for it to actually pull back to this mini breakout base here of around, let's say, $15, or buy the secondary break if it can break through longer term resistance of around $18. And that resistance level more or less dates back to around 2015. So that's about 4 years in the making. So if it gets through that, it's a pretty strong move and a strong level. So again, you can pay attention to silver. I just did an analysis on gold. If you are looking for a hedge, getting in here at 1652, I don't necessarily think it's a bad idea. But for me, I like to place things extremely in my favor. That's how I trade, and for that, I'd wait for it to actually pull back to that once resistance level, now support of around 15. That's a decent level, or perhaps you can wait until it really confirms its strength and breaks through resistance that's held for about 4 years, and that level is around, we can say the upper 17, lower 18, somewhere around there. So you might want to consider silver, and I'll do one more before we wrap up. What else? All right, so let's wrap it up and round it out with ticker KO, Coca-Cola daily chart. So again, if you're looking for a hedge, and I'm going to link an article in the description box on essentially discussing what a hedge is if you're not familiar. So look out for that article. I'm also going to link an article essentially outlining what my game plan is, or my game plan when I'm dealing with either a bear market or market correction. All right, so getting back to Coca-Cola, if you're not looking to get into gold or silver, you might want to consider getting into Coca-Cola as a defensive play. We're up about 1.5%. We closed at 54.54. We actually took this trade in the premium member community a few months ago. Got in around the low 40s, low to mid 40s, I believe. Ended up getting about 8% on this trade. Nothing to necessarily write home about, but nothing to sleep on either. We let go of this trade, and on some levels, I am looking to get back into this trade. So giving you this one, take a look at Coca-Cola. Again, it's up about 1.4%. You see a call there 54.54. I may not jump into it here, but wait for it to pull back a little bit. Once it gets that sell-off, perhaps you might want to go long there, right? So let's cap it there. Tina here once again from ShortMeTina.com. I'm going to apologize one more time for the audio, but if you enjoyed any portion of this video, I'd like for you to do three things for me. One, after you read that article on hedging, or if you are hedged in this market, in the comment section so we can help other folks out, let us know how you are hedging your long-only portfolio. I gave you three ideas: silver, gold, and Coca-Cola. Some might even go to Bitcoin. I didn't analyze Bitcoin today, but I've done it last week. So if you want to know my thoughts on Bitcoin, watch any of those videos that I did last week. So the first thing is comment in the comment section. Secondly, I do videos Monday through Friday, so if you want to ensure that you do not miss any, make sure that you are subscribed to our YouTube channel at ShortMeTina. And lastly, my friend, I've been trading for well over 15 years, so if you think you can learn anything from me, then head on over to ShortMeTina.com, sign up, become a member. Thank you for listening, and as always, thank you for the support. I realize as I'm doing my closing, I did not welcome you, so I want to welcome you if this is your very first time tuning into a ShortMeTina video, and if you were returning, I want to say welcome back. That was all over the place, but it doesn't matter. You got the price point, you got the analysis, and so I will see and talk to you tomorrow.